The month of October and the fourth quarter was off to a strong start Friday after the third quarter was the worst for the stock market since the start of the health crisis. The Dow surged 482 points, the S&P 500 rose 49, the Nasdaq gained 118. But it still was a down week. The S&P 500 shed more than 2% in its biggest weekly drop since February. Investors have to keep watch on deliberations in Washington, which have the potential to quickly swing markets, says Winthrop Capital Management Portfolio Manager Adam Coons.
What we'll see is just a range-bound market for a little while we just kind of process through this. Obviously, the things going on in DC play a part in that. So what we'll see is big up days, big down days, but ultimately we think we just trade flat for a while.
Merck helped set an overly positive tone for the day. The drug maker said its experimental oral antiviral COVID-19 medication reduces the chance of hospitalization or death for patients at risk of severe disease by around 50%. It plans to seek emergency authorization for use in the U.S. and apply for regulatory approval in other countries. Shares of Merck hit a multi-year high, up more than 8% on the day. The trial results fueled hopes that Americans will feel confident enough to go out and be sociable. Airlines, hotels, cruise ship operators, retailers, and restaurant chains all saw their stocks move higher. But on the flip side, investors fear vaccine makers like Moderna could sell fewer doses. Shares of Moderna got slammed, down some 11%. Shares of BioNTech were down nearly 7%. Pfizer, which is working on an oral COVID-19 treatment, barely lost anything. Economic data kept the positive vibes flowing. Consumer spending rebounded sharply in August, up 0.8%, and though a measure of inflation remained hot, it didn't get much hotter. The core personal consumption expenditures index, a measure favored by the Federal Reserve, rose 3.6% on an annual basis, matching the jump seen through July. In a separate report, manufacturing activity was stronger in September, but persistent supply chain disruptions are keeping prices high. It's being considered as a potential breakthrough in medical circles. Merck on Friday said its experimental antiviral COVID-19 medication reduces the chance of hospitalization or death for patients at risk of severe disease by around 50%. If authorized, Merck's drug, known as molnupiravir, would be the first oral antiviral medication on the market. Pfizer and Roche are both working on antiviral pills as well. So far, only antibody cocktails that are administered intravenously are approved for treating COVID-19. The global Merck trial involved 775 patients. Interim results showed 29 days after taking the pill every 12 hours for 5 days, patients given the pill were 50% less likely to die or be hospitalized compared to those given the placebo. In another piece of upbeat news, Merck says viral sequencing done so far showed the pill is effective against all variants of the coronavirus, including the highly transmissible Delta variant. Merck and partner Ridgeback Biotherapeutics plan to seek U.S. emergency use authorization for the pill as soon as possible and will submit applications to regulators worldwide. The drug maker said it doesn't know how long the FDA will take to review the drug. The company did not detail side effects, but did say men enrolled in the trial had to abstain from sex or use contraception, and women of childbearing age could not be pregnant and had to use birth control. Merck expects to produce 10 million courses of the treatment by the end of the year and has a contract with the U.S. government to supply 1.7 million courses at $700 per course. Shares of Merck surged in midday Friday trading. Vaccine makers like Pfizer, BioNTech, and Moderna slumped on the news.
Ukraine has demanded that the US and Germany impose sanctions on Gazprom. That's after the Russian energy giant implemented a new deal with Hungary that deprives Kiev of gas supplies. Under the terms of that agreement, Gazprom will no longer ship gas via a pipeline running through Ukraine. Instead, the gas will go via Serbia and Austria. That deprives Ukraine of transit fees. It also means it can no longer import gas from Hungary by reversing the flow. Signing the deal earlier this week, Hungarian Foreign Minister Peter Szijjártó said it was all none of Ukraine's business.
Visszautasítom.
I reject the attempted meddling with Hungary's internal affairs. Providing Hungarians with heating in winter is our job. This cannot be influenced by any other country. What contracts Hungary decides to enter should not concern any third parties.
Kiev's ties with Moscow have been in crisis since its annexation of Crimea in 2014. Now the head of Ukraine's Naftogaz says that the new deal constitutes clear use of gas as a weapon. Yuri Vitrenko says that requires a response from the US and Germany, who promised to act in such circumstances. It could be delicate timing for Russia, which wants Berlin to certify the Nord Stream 2 pipeline to Germany that was recently completed. The project has long been opposed by Washington, precisely because it fears gas supplies could be used as a strategic tool by Moscow. There was no immediate response to Vitrenko's call from Berlin or Washington. The Kremlin dismissed it as unfounded.
Self-driving startup Aurora says it's on a path to turn costly self-driving vehicles into a profitable business. The US firm has been showcasing its technology to investors this week. Ahead of a public listing, it hopes will provide around $2 billion in additional funding. The move comes as several autonomous trucking companies prepare to launch driverless routes in the coming years and turn self-driving into a profitable reality. Aurora wants to provide both autonomous freight trucking and robo-taxi services. But autonomous vehicle companies have yet to generate significant revenue, despite investors pouring billions into their development. Trucking has emerged as a key opportunity to commercialise AVs, though. It's been fuelled by growth in e-commerce as well as a shortage of drivers. Drivers currently account for more than 40% of per-mile costs and can drive no more than 11 hours per day. Those restrictions do not apply to automated trucks. Aurora plans to launch fully driverless trucks at the end of 2023, with robo-taxis to follow a year later. But it faces fierce competition from the likes of well-funded startups, including Alphabet's Waymo and Argo, which is backed by Ford and Volkswagen.
It is the start of a new quarter. Can Wall Street put behind it what was the worst quarter for the S&P 500 since the start of the pandemic? Well, let's talk to Adam Coons. He's a portfolio manager with Winthrop Capital Management. Hey, Adam.
Hi, Conway. Thanks for having me.
Hey, I want to start first with Merck, if we can. We've heard terms like game changer, breakthrough in terms of this new pill this experimental pill that could help treat COVID-19. How do you see it?
I think we see it as innovation is going to continue to come, and we see this as just the next step in that innovation towards fighting, all pandemics in general. So game changer is probably a bit of a stretch, but absolutely kind of helps push us forward, and that's kind of how we see it is this moving back to a normal society, and this is just the next step.
And I wonder, how would you frame it in the context of the economy, especially given the fact that, before this pill or word of this pill, we saw airlines, seeing slowdowns, the entertainment companies, the theaters, retail, complaining about slower consumer traffic. So with a pill like this, does that bode well for the economy?
Yeah, I think what we need is for people to feel a little bit more secure. I think when we first saw the vaccine come out, we saw a little bit of that and people saying, hey, we can get back out there. And then that started to slow as we saw the Delta variant kind of pick up across the globe. And so like you said, entertainment and airfare and travel in general started to decline. You see that in the prices of airfare have declined sharply over the past month. So it's a real thing that it was slowing. So I think this kind of gives us another boost towards moving towards, I guess what you want to call it, the old way, the normal. And so yes, you will see people feel more comfortable going to concerts, going to venues, and perhaps with less restrictions, because I know that is kind of the roadblock for a lot of people is, some people that might not even have the vaccination or haven't been comfortable with it so far might feel more comfortable with it now, and that will open the doors for them to go to more things out in the world.
So another piece of information that we received on this Friday, we got the PCE number, personal consumption expenditures. It showed that consumer spending rebounded in the month of August. So if you kind of put this like COVID-19 pill together with the fact that we got strong consumer spending, does that mean that the consumer could remain strong into the end of the year?
Yeah, I mean, I think the hurdles right now for the consumer are going to be number one, supply chain. So while the consumer may be willing to go and spend more money right now, the issue that's rising is there actually a product out there for them to go purchase? I mean, if you've been in a store, the aisles are a little more sparse right now. It is more difficult to get what you want. If you want a new car, you can't just necessarily go to a dealership and buy it right now. So those will be the hurdles for consumer spending, we think, here in the fourth quarter. So it's not just the ability financially to buy, but whether they can actually find the product they want. The other piece that we're worried about is there's still a lot of unemployed Americans out there, and regardless of the reason, the fact is that a lot of those unemployment benefits are rolling off. You're seeing student loan repayments pick back up. And so a lot of those things will put a little bit of pressure on individuals that maybe were in a tighter spot. So that will have an effect on spending. But overall, what we see right now is that going into the holiday season, that it's going to be a fairly strong holiday season.
And talk to me about inflation. I mean, we also got some data today on inflation. The core PCE up 3.6% year over year, which was what we saw It was the same rate of growth the month before. But you believe that heightened inflation will be with us for the next, I think you said the next 2 years in your note. So how
Yep.
do you position your portfolio given that inflation outlook?
Yeah, so in an inflationary environment, you want to be long growth type names. So we still like your Alphabet, your Microsoft, Amazon, Salesforce. Those type names still benefit through an inflationary cycle. In particular, if we see growth pick up. Now, if we see growth level off and we move into the terms use stagflation, that changes a lot of things. But for right now, as long as growth continues to be sustained, we can manage through inflation because you are still seeing wage inflation, which is above 4% right now, which means spending power is actually outpacing the price of goods. So that will keep the economy strong. So yeah, you want to be long growth right now.
And finally, before I let you go, let's talk real quick about China. I know you are not, maybe not say bullish on China, but you're not as worried about China as a lot of other investors are. And so you still believe in China. How do you play that? Do you play it through Nike, Apple, Caterpillar, or some other way?
So I'm not afraid to use the word bullish, and we're going directly into it now. We're take Evergrande to the side. That is his own thing. But when we look at companies like Tencent, Alibaba, Baidu, and JD, very specific Chinese-based companies, we see tremendous growth opportunities. They're cash flow rich companies, and we don't think that the Chinese Communist Party is going to put these businesses out of business just for the sake of a party stance. So we see this as a short-term blip. There is going to be heightened volatility over the near term, but ultimately we see this kind of in the 7th to 9th inning of what China's trying to do on cracking down on regulation. So we're incrementally adding to our Chinese positions as we see increased value, and we think long term these are companies that are going to compete head on head with their U.S. counterparts.
All right, thanks. That's Adam Coons. He's a portfolio manager with Winthrop Capital Management. I'm Conway G. Gittins, and this is Reuters.